Good evening, ladies and gentlemen. I'd like to welcome you to our investor update. I'm your host, Dan Theok, Senior Vice President of Investment Banking. I'll be guiding you through today's proceedings. Joining me on the panel today is investment advisor and familiar face, Brandon Thomas. Welcome, Brandon.
Hey, thanks, Dan.
I'm sure you're all looking forward to what he'll be bringing in today's discussions. Today's we'll be looking at Caribbean Producers Jamaica Limited and NCB Financial Group Limited. If this is your first time checking us out, consider subscribing to the channel. And remember to hit the bell to receive all notifications. We upload content like this every week. Before we get started, I'd like to take this moment to remind you, if you're looking to expand your portfolio or embark on your very first investment journey, Mayberry can place you on track to financial freedom. Follow us on social media at Mayberry INVJA to learn more. Up first, we want to look at CPJ Limited, which Brandon will be presenting for us. Hey, Brandon, what do you have for us?
All right, so evening, everyone. So we'll be looking at CPJ right now, and we're looking at the 3 months that just ended September, and we see where their revenues are up 32%. We see where their gross profit is up 26%. However, their selling and admin expenses are up 41%, which led to net profit just being up 2%. They mentioned, the selling and admin expenses going up because they're trying to prepare for the boom and the growth in the hotel and the tourism industry. As we know that there are going to be thousands of rooms that will be built over the next couple of years, and that should bring about exponential growth for CPJ moving forward. So at current prices at about $12.31, we're looking at a PE of 11.75 times. As a main market stock, newly minted main market stock, they are fairly valued. But I think that CPJ has a lot of growth, as I mentioned, because of the prospects that we expect in the tourism industry. Moving to the next slide, we see where the quarterly profit movements coming out of the pandemic has become somewhat consistent. Prior to the pandemic, CPJ was perpetually making losses, and there's a lot of issues that would have been with the company that they have since resolved, and now you can see consistent profitability. Now, something to look forward to, the next quarter, of obviously the December quarter, which is the winter period, we expect heavy tourism numbers to come through in that period. There's already predictions that it will far surpass 2019, which was a record year for us. And as you can see, even during the pandemic in Q2 of 2020, they still made a profit despite heavy losses in every other quarter. So we can expect, similar to the corresponding quarter of last year, that a huge profit figure should be incoming. Moving on to the next slide, we see the share price movement, where towards the top of the year we saw where the share price went as high as $23, and now it has trended back down to $12.31. Obviously, we know market sentiments, and there's a lot of fear in the market right now, a lot of trepidation because of high interest rates and different things going on in the world that might cause people to either divert funds elsewhere or to just not be as confident in buying companies at the moment. But we at Mayberry believe this is a good opportunity to buy stocks in general. You always want to buy when others are fearful and are running away from the market. So now at these prices, as I said, it's relatively undervalued. It is a good purchase at the moment. I want to say, CPJ has mentioned in the latest report that Draxall, the new Draxall retail location will be open soon, which obviously would further deepen their presence in just the retail segment of the market. Draxall is also perfectly located for all the Airbnbs that they'll be able to cater to. They're also further, expanding in the retail in St. Lucia. They built a second location there, and they're, expanding over there really nicely. CPJ is also, has mentioned that they're going to be doing an acquisition at some point in an exciting Caribbean territory. So we're looking forward to that as well. And just the overall growth of the tourism market is expected to directly benefit CPJ. All the food and beverage and alcoholic beverages distribution going to all these different hotels and different Airbnbs and even supermarkets and other just individual retail customers we expect big things from CPJ moving forward. They recently, they're going through a process of refinancing their debt. So all of these would bode well to the profitability of the company. Any thoughts, Dan?
Yeah, thanks for that. Of course, first I want to declare interest or conflict in that Mayberry is a top 5 shareholder in CPJ, and we hold 2 board seats. And we had hoped to have Tom Tyler and Mark Hart on the program, but unfortunately they weren't able to make it. But I did have a conversation with Tom and Mark, and both are excited about the prospects. We saw the Q1 results coming out. The only negative thing to note is some tax type audit going on. So we know they've got some customs duties or GCT issues they need to resolve. But more importantly, the prospect of growth for the tourism sector with 5,000 to 6,000 hotel rooms currently under construction and a standing casino coming, it tells me that CPJ has great prospects for growth over the next 2 to 3 years. These are deals that they've almost already sealed, and the quality of the tourism spend, I think, will improve drastically with these newer hotels coming. You also mentioned the expansion in the retail space, the fact that they had just opened up the Montego Bay store last year. They've just opened up the Draxall store. They repurposed the Kingston store, and all of those stores are doing very well. So they're growing both in the retail space and in their institutional customers in the hotel segment. They worked up good level of inventories to prepare, and I expect to see them working down those inventories over the next 3, 4, 5 months to bring back a lot more cash to the business. We talked about them refinancing the business and continuing looking for growth opportunities. So it's a great company in a great growth mode. And I think at $12, despite the PE being a tad bit rich for the junior market, for the main market that's now in the 10 to 12 space, it's the growth prospects for CPJ that gets me excited. And I think that's why we've seen this stock as high as $20 in the last 12 months. So down at $12, let's not forget, coming from 2 years ago where they were stuck in the $4.50 to $5 space, it's great to see them at $12.
Definitely.
But I think in the next 12 months, we're going to come back and see that this stock has jumped another 30 to 40% as we see the growth coming. You're spot on with the next 2 quarters coming up being strong tourism-related quarters. So I'm expecting earnings to continue to grow going forward. It's a great company run by 2 great guys, Tom and Mark. We'd like to see them getting a new CEO and just working generally on the succession planning for the business. But other than that, I think it's a great business, great stock to buy. Thanks for that, Brandon. Appreciate that. Moving along to another great company. And these 2 are definitely in my top 10 picks, by the way, guys. You can't have a serious portfolio and you not have CPJ, which gives you tourism exposure, and not have NCB in your portfolio, which gives you good banking exposure. And before we started the program, I talked about the stock. I bought the stock 7, 8 years ago at $45 originally. Then I bought a lot more 4 years ago at $90. And here we are looking at this stock today at about $85. And this is pretty much a 5-year low for NCB. Yeah. So that's the first thing you need to take in mind. And then we look at the results that just came out. This is the unaudited for the 12-month period, September, and they are spectacular, starting with 22% growth in net interest income, 84% growth in their insurance segment, and they talk about new initiatives in the pension, health, and life insurance business in both Trinidad and Tobago and in Jamaica. Synergies they've gotten from that, and the great rewards that they've gotten from that. And then that just trickles down to 72% growth in profit before taxation, 99% growth in the profit after taxation, 92% growth in the profit attributable to shareholders, up at $27.3 billion. So NCB is definitely back. These are the type of numbers we were used to seeing 3 and 4 years ago, but with one-off gains of $5 billion here and $6 billion there and $7 billion there 3 years in a row. And you wondered, could they really sustain profitability in the $25 to $30 billion space with huge one-off gains? And the answer is yes. So 12-month results here, EPS of $11. At a 10-time multiple, conservatively speaking, this stock should be at least $110. So it's undervalued by at least 25%. And then as interest rates trend back down over the next 6, 9, 12 months, we're going to see the main market PEs going back towards 12 times. And you'll see this stock going back closer to, I think, $140, $150. So that's what I expect over the next 6 to 12 months for NCB. In terms of looking at the financial results, I mean, the only thing concerning is the fact that we see, while total assets have grown by 8% to $2 trillion, and I don't often get to say $1 trillion when I'm analyzing any company in Jamaica. So, again, kudos to NCB. My only concern was just seeing that shareholders' equity fell by 7%, and that's because of the mark-to-market on the global bonds that they're holding in their portfolio, and that's being marked down through OCI. So again, rising interest rates means the fair value of fixed income instruments that they're holding in their portfolio, global bonds and whatnot, would be coming down. But to the extent that they have adequate cash flows in the business and they're generating good cash, they'll be able to hold those bonds to maturity. And failing that, again, over the next 6, 9, 12 months, as interest rates start to trend back down, and we all expect that they will, then you'll see that value in those bonds coming back. So no big concern for me there. Just wanted to take a note of it in case you say to yourself, well, how's profit up by 92%, but shareholders' equity is down 7%? That's what's going on. It's the mark-to-market of those global bonds, fixed income instruments that's going on through OCI. Moving on to the next slide, we sort of see what's been happening again in terms of the profitability throughout the pandemic and the challenges they've had in the last 2 years. Please take note of the last 3 quarters where we see earnings consistently in the $8 billion space. We've got one more quarter to go, and you'll be dropping that $2.6 billion quarter. And so the trailing earnings could improve from $27 billion that we're looking at now to potentially $32 billion. And at $32 billion with a 12 times PE, this is a $175 stock, folks. So I'm really looking forward to the next quarter's earnings. And I'm really looking forward to interest rates coming back down. And I've just explained to you why this stock could easily be in the $150 to $175 space within the next 12 months. Next slide shows you how the share price has been trading. We've seen it coming off of a high of $142 for the last 12 months, now down at $85. A 5-year low, as far as I know, all throughout the pandemic and prior, the stock was in the $150, $160 space. We saw it fall to about $125 at first, and I wondered how low could it go. This has actually surprised me to see it go sub 90, quite frankly. But I'm confident now is a great time to be buying NCB. Again, I bought it 5 years ago at $90 and liked it. And they were doing $27 billion in profit with one-off gains. Now we can see $27 billion straight, no one-off gains. The GHL acquisition is bearing fruit. They've sorted out the challenges they had on the insurance side. They've got those synergies together. We saw some redundancy cost in this last year. It shows us that they're reducing staff headcount, incurring some separation costs. So again, I expect over the next 12 months, you'll see earnings continuing to stay high. We see the expansion into the digital space and their commitment to do that and remain sort of a premier and leading financial ecosystem in the Caribbean. So it's really hard to bet against NCB. I'll definitely be buying more as long as this is below $90, $95. I don't think that's going to last long. I look forward to coming back next quarter to see how they do. Brandon, any thoughts from you?
No, I couldn't have said it better, Dan. I mean, GHL is a huge piece to this puzzle. So the share profit that they would have gotten from GHL doubled pretty much over this last quarter, which would of course led to how much improved their results are. Also, something else that you touched on, which is the big delving into the digital space. I mean, that is something where it's almost as if they're trying to put themselves out of business. We just see where Link just got license for remittances. That would be a huge step where, in theory, people will be able to send monies to their loved ones here locally via the app. Instant cash deposits, and it can be a big game changer and a big disruptor in the space. We know how large remittances are for Jamaica, that is, and just in general, Link can become a huge part of how we transact business if NCB continues to build it out in the way that they want to. They're investing hundreds of millions of dollars every year into just deepening that digital kind of investment that they've been making. and they have heavy focus on it. And I think it will pay huge dividends in the future. Speaking of dividends, there's been a lot of hullabaloo about NCB not paying dividends, and I think at this time they want to just play it safe with some of the market conditions that we're all the financial institutions are facing. We see also JMB has opted not to pay dividends as well. So there are some concerns there that they want to just make sure that they're properly capitalized. But I believe that in over the medium term, dividends will return in a big way. As you can see, profitability has skyrocketed, and that will continue to grow. So rest assured, investors, I do think dividends will return at some point in the near future.
Absolutely. We saw them, raising over $300 million and firming up their liquidity. This is the largest bank in Jamaica by far. And Jamaica still has a huge unbanked population. And so this move into the digital space, kudos to NCB.
Definitely.
Because, you have to be able to disrupt yourself. I mean, they grew their deposits by 11% to $715 billion. So this is a huge bank in terms of when you look at the cash that they're holding on and faithful depositors, and yet Jamaica still has such a huge unbanked population. So it's good to see a strong brand like NCB pushing into that space, and I really look forward to seeing them tapping that space, similar to how we saw Last F going into the space and coming up with their own card. There's a huge market out there, and so it's great to see a bank like NCB, as big as they are, still focused on how do we continue to grow our business, leverage our brand, and to go after even the unbanked. So kudos to NCB, great performance. I really look forward to coming back and looking at this stock in the next 3 to 6 months. I have no doubt this will be at $150, north of $150 in the next 12 months. I have no doubt that interest rates are basically peaking now. And in the next 6, 9, or 12 months, we're going to see interest rates starting to trend back down. I think we have maybe one more Fed increase coming, and that's it. I think inflation is being checked. Folks are feeling the pinch of the credit squeeze. So it's just a matter of time before we see inflation back to normal levels. Then we see interest rates trending back down, and then we see PE ratios going back up. That's how it works, folks. You heard it here first. We look forward to coming back and talking about NCB and CPJ, two great companies. Great time to go out and get you guys some CPJ or some NCB. Well, that's it for today, folks. Really appreciate having you here. We want to keep it short and sweet. We want to thank all of you for being a part of today's investor update. I'd also like to thank my fellow panelist, Brandon, for his usual contribution and invaluable insights. Thanks, Brandon.
Yeah, thanks, Dan.
We urge our viewers to follow us on social media to keep up with all things firm related. This includes guest speakers and more. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Thank you to our viewers for tuning in today. Keep safe, folks, and remember, wise investors, slow and steady wins the race. Goodbye.